I'm very honored to welcome Nicholette Mac Donald-Brown. She is head of the European Blend team at Schroders. In the next couple of minutes, we talk about measuring purpose and behaviors alongside profit. It is, in your view, what helps determine sustainability. Why so?
So I think it's really interesting for our industry to think about how we address sustainability in the same way that we address achieving risk and return for our clients. And so to achieve that, it's got to be clear what we're trying to achieve and how we're going to measure our success. So purpose and measurability are key to success and sustainability.
What has triggered the increased focus on purpose and behaviors in recent years? Is it the investors?
I think it's society as a whole. I think if we think about what we've seen in Europe and around the world over the last sort of decade, we've seen a huge shift to sustainability targets at a government level. If we think about the introduction of UN SDGs in 2015, we've seen Paris in 2016, and more recently the Sustainable Finance Plan, etc. here in Europe. So we've seen some very significant changes at a government level, particularly with regards to the environment. And then also on a sort of man on the street level, we've seen a big shift towards a commitment to understand the impact, the small I, of our activities on the rest of society. So I think the desire for sustainability purposes has come from the person you're interviewing in the building to work for you, just as much as our investors trying to understand if they can put sustainability targets alongside their traditional risk and return targets.
So how has the increasing focus on purpose alongside returns changed your investment process?
Yeah, I think that's a good question, and I think it's an ongoing question. The way I would look at it is that, as you allude to, we have put an incremental purpose alongside our existing purpose of outperforming a benchmark. And to do that, we've had to move to embed sophisticated tools alongside traditional fundamental analysis. And what this has really enabled us to do is discuss sustainability in a specific fashion rather than talking about good or bad companies. So as a firm, Schroders has invested significantly in proprietary assets, really to help their investors gauge what the important topics are, how companies are responding, and importantly, how those companies are responding relative to their peers and to what they could possibly be achieving. So for us, as we have moved to integrate sustainability across all of our assets and then run dedicated sustainability products, the move has been towards proprietary tools and specific analysis.
Let's look at management teams. How have they changed in the aftermath of these changes in general?
Yeah, so I think it has been a tough ride for some management teams. If you think about that stat that I was talking about at the beginning about government targets, if we look at government targets, we probably around the world have between 65 and 70% of governments having decarbonisation targets. And if you compare that to financial markets, where it's only around 20%, it's clear that there's a lot of catch up to do, even on the environmental level. So I think some managements have had to respond very rapidly to a change in investor questioning. And then we've had other managements who've clearly been ahead of this curve and are very well prepared. So I think what we're seeing is, as in the asset management industry, a move towards management looking to discuss sustainabilities in a specific and measurable fashion, and also look to engage with investors and their peers to work out what is the best response for them given what they do.
Let's look at the sectors. How have they evolved?
Yeah, so I think, unsurprisingly, different sectors have responded in different ways. Clearly, if we look at, the energy sectors, the utilities, and some of our more extractive industries, they have very much been focused on moves towards environmental concerns and how they're going to approach decarbonisation. So some of those industries are far ahead. But then obviously we have other industries, finance, for example, where it's more of a people-heavy industry. And when you're thinking about environment in those terms, you're thinking about, one step, what their investors look like, as well as what their buildings are emitting. So for us, we've seen very much sector-specific responses, verging from a pretty common focus on the environment across the board to the response of some, crises around Me Too, supply chains and people in other industries. So as ever, I think what we'll see is some sense of environmental commitment as being an entry-level response to sustainability. And then layered on top of that, you'll see companies and sectors respond in a more sort of idiosyncratic fashion.
And what about markets in general, financial markets, for example?
Yeah, so as I said, we're definitely seeing a sort of step shift towards the inclusion of sustainability targets, both at a corporate level, but also potentially in sort of compensation levels. But I think also what the shift to sustainability has really enabled the markets to do is remind investors, professional and otherwise, about the potential for change. And so we're definitely seeing a lot of focus on technologies that could enable the economy to decarbonize. But we're also looking at better ways to do business, how people are treating their workforce, their supply chain. And so, again, this concept of impact with a little I, so not just what you're doing, but how you are achieving it.
Some pockets of the market, like green energy, they have attracted significant flow and attention. Tesla, Vestas, Ørsted in Europe are some examples. Would you talk green bubble?
Well, it's a green bubble that's been a little popped recently. I think, as ever, we are going to see pockets of the market that become fashionable. And clearly, renewables enjoyed an incredibly strong run in recent years. And I think, as I alluded to, it's partly because, as we've discussed, environmental factors have really been at the forefront of, governments and investors' response to increasing sustainability demand. I think what has happened more recently, particularly after some technicalities around offshore wind auctions, it has reminded investors that it's important that we understand how companies are going to fund their growth and what that profile will look like in the near term, as well as in the longer term when the transition has taken place. So I think many of these areas of the market remain attractive. And if we look at renewables now, I think the recent sell-off is likely to provide some opportunities. But as ever, it's about finding that balance between long-term opportunities and the ability of companies to fund that growth.
Do you see other sectors gaining momentum?
Yeah, I think that's an interesting question. I think, the market's always looking for the next big thing. And I think really what we're going to see now is an increasing focus on companies that are in transition. So we very much experienced this moment when sort of pure assets have done phenomenally well. And I think now people are recognizing that with sustainability, you're going to have shades of grey, and looking at businesses that are in the process of changing, perhaps alongside shareholder help, can offer very attractive opportunities to investors. So I think really, as in any market, as clients become more sophisticated, the market broadens as you can move from very much the pure assets to the slightly grayer assets. And that's where us as active investors have the opportunity to help companies transition and our clients understand the potential for change.
And will this movement change the perception of Europe, or hopefully Switzerland, being home to old economy type of businesses with little innovation compared to other regions like the US?
Yeah, I think that's a great question, and we're often tarred with that brush. I think it's really important to remember that, particularly if we're thinking about sustainability, that Europe is leaps and bounds ahead of the rest of the markets. And certainly, if you were to compare just the European market to the global market as a whole, we're distinctly above average, far above average on the majority of metrics that we're measured. So from a sustainability perspective, I think we are already ahead of the curve. And then certainly when we look at some specific industries, whether we're looking on the medicine side, clearly we're best in class. And again, on the tech side, we look at some of our semi-businesses, we're leading the charge. And clearly in an area that was once deemed to be almost untouchable by investors, we have seen the likes of Volkswagen be transformed over the recent period as increasing targets towards the transition towards green energy and away from internal combustion engines have reminded the market that, in Volkswagen, you have a business that will probably produce more cars than Tesla that are green. So we definitely have cutting edge technology and best in class sustainability profiles available in Europe.